John, make the case for commodities right now. Does this have to do with alternative investments, people wanting to have something in the portfolio that doesn't correlate with what happens to bonds and stocks?
That's part of it. I mean, clearly the historic record and the academic record that research has established is that commodities tend to do very well when stocks and bonds aren't doing so well. So that's certainly a plus. But I think the really big reason why you want to look at commodities now is just what we've been seeing over the last years, which is the rise of China and the rest of Asia. And that demand, that industrialization, that urbanization that has taken in some 300 million people so far is only going to continue to grow. And that's going to push prices higher.
So, John, is this a longer term, as they describe it, a secular trend, not something that's tied to a cyclical recovery in economic growth?
Well, certainly the recovery in economic growth will help, but definitely this is part of a secular trend. I think this trend has at least 5, maybe 10 or 15 years more to go.
Trend, what does it mean for specific types of commodity investing? I mean, should you be buying actual physical oil, for example?
Well, I think certainly professional traders can look at buying the physical oil, or one smart way for investors is physically backed ETFs, which track the commodity very well. Of course, I think rolling contracts is really the purview of professional traders. I don't think that's something that the individual should be doing. What I advocate in the book and what I think most investors should consider is senior producers, producing companies that have leverage to increasing commodity prices, and particularly in the case of the mining companies, are often discovering more and more commodity as they dig underground.
John, what about the correlation between the stocks of, let's say, mining companies and the actual metal itself? For example, gold and gold bullion. Is there one that has proved more profitable an investment over the past?
Well, in general, the commodity tends to do a little bit better than the producer in short periods of time, and that's partly because the industry and the investors look through the cycle and see that, while prices may be high today, they will eventually come down. But I believe that if you consider what happened in the 70s, for example, that was the last big commodity bull market, and in that time you had 75 million people there or thereabouts going into the middle class in Europe, in Japan, and in North America. While today we have potentially 2 billion people coming into the middle class over the next 20 years, at least according to estimates by Goldman Sachs. And moreover, we've had a lot of decline in terms of grade across the world. So supply is really sluggish, demand is even stronger, and that will set it up to be higher for longer.
John, what about the choice between using exchange-traded funds, for example, to participate in commodities? We can use natural gas as an example, or actually trying to use futures contracts, perhaps for more sophisticated investors.
Sure. Well, I think if you're comfortable rolling futures contracts, by all means, particularly if you do it without using leverage, that tends to have the best possible performance track record. So I would encourage people who are more sophisticated to look at that. If you're more of an amateur investor and you just want exposure to the sector, you could look at the ETFs. Of course, the ETFs track an index, and depending on the shape of the futures curve, it will really dramatically impact your results.
Now, John, last summer you were down in a mine in McArthur Lake, this having to do with uranium, Cameco in Canada. What did you find there? Is something like uranium a good commodity to invest in?
Well, it is a pretty good commodity. I would say the best commodities right now are oil and the base metals because they're more tied to the economic recovery. But certainly uranium is used for nuclear power industry. It's been on a resurgence lately. It's gone from around $40 to around $45 right now. And long term, I think you could see at least $60. So I think it is a good one. And certainly that particular mine has the highest grades of uranium in the world.
All right. I want to thank you very much, John Stephenson, the author of the new book, The Little Book of Commodity Investing.